All right, so we're going to be talking about why crowdfunded loans is going to be the future for NFT collateralized lending. My name is Rong-Sing. I was previously the founder of ZeroBit, a decentralized file storage gateway. And before that, I helped found a company that was doing data aggregation, which was acquired by Zillow in 2015. This is my co-founder, Ryan. He was a senior engineer at Chainlink Labs, led many of the core integrations and products. And we met in grad school in 2018, where we tried to found the Cornell Tech Blockchain Club, but they wouldn't even offer us a room to host our events because they thought blockchains were a fad back then. But yeah. So let's meet Bob. So Bob is a big NFT collector, and he needs liquidity. In an awesome world, Lisa, who has a lot of tokens, will be able to provide a loan to Bob. And using his NFTs as collaterals, earn yield in the process. So this is what we mean by NFT collateralized lending. There are two existing ways that we can do NFT lending. The first is a single lender protocol, and the other one is a lending pool. So these protocols both have several problems. Lending pools took the inspiration from Uniswap, right? We all know pools. But they must make the fundamental assumption that NFTs are actually fungible, because they can only lend to the floor price. More importantly, they require complex infrastructures such as oracles in order to work and to be able to liquidate assets whenever the price drops. As a result, all the risk is now pushed to the borrower side. With the single lender approach, the problem is that it's very hard to do one-to-one matching, to find an exact borrower to match your loan. And when people do find that match, the interest rates are usually extremely high because they must cover the risks for that entire loan. But more importantly, single lender protocols disadvantages small lenders because a big lender can always offer a little bit more money or drop the interest rate by a little bit to outcompete the little guy or the lady. And this creates monopolies, which means that ultimately big lenders will always win in these situations. This is one of the main reasons why we believe there's only 0.5% of NFTs being collateralized to date. Now, the nearest market, which is art loans, it's 3.6 times bigger. This is just the public figures. Crypto lending, which is 22 times bigger, and real-world assets such as real estate, which is even bigger. So we think there's huge potential in NFT loans and lending. This is why we designed the first crowdfunded lending protocol with the goal of providing the highest loan-to-value ratio out of any of the existing protocols at an optimal interest rate, and that balances risks and reward for both lenders and borrowers. I'm not going to let Ryan talk about all the details.
All right. Hey, guys. So again, I'm Ryan, one of the co-founders of Now Finance. And I want to use this opportunity to dive into a couple examples that we think really demonstrate why crowdfunded loans are a superior mechanism. So let's revisit our friend Bob. And let's say Bob is seeking a $1 million loan against his NFT as collateral. Now, in the single lender protocol, Bob has to find a single lender and find a single offer that meets his needs. It's like finding that perfect puzzle piece that perfectly fits your financial needs. And Bob may not find that one perfect puzzle piece, which means he may have to settle for a lower valuation or a higher interest rate than he wants. Now, this is bad for Bob, but what I really want to highlight is that it's also bad for you. It's bad for you as a prospective lender. It's bad for you as somebody that wants to be involved in this financial transaction. You want to participate in this loan. You want to earn yield. But unless you have $1 million lying around, or some significant fraction thereof, you can't make a competitive offer to Bob. So he doesn't want your loan. So you're priced out because you don't have $1 million. And this I find particularly frustrating because I think it flies in the face of the ethos of crypto, which is that you should not be excluded from financial opportunity just because you're a small player. This is why we want to crowdfund our loans. We want to aggregate lots of smaller offers from smaller players, balance their risk and reward, and meet Bob's full valuation and distribute the interest he's willing to pay to all of those participants. So hopefully you see why this is useful at a bigger scale, but I also want to highlight how crowdfunding can be useful even for small loans. So let's instead imagine that Bob is seeking just a $10K loan, and he has two offers on the table. Larry offers $5K at 5%, Lisa offers $10K at 10%. In the single lender model, Bob has to choose one or the other. Do I want the higher valuation or the better interest rates? And maybe in this scenario, he goes with the higher valuation. But the better outcome for Bob is a hybrid approach, where he takes a piece of Larry's offer, a piece of Lisa's offer, gets the full valuation, and pays a hybrid rate. And Larry and Lisa split the rewards according to their valuation and their risk tolerance. So hopefully at this point, everybody in the room is thinking, okay, this sounds good. I get how you can get these better valuations and better rates, but what if Bob runs off with the money? What do you do then? What if Bob defaults? And this is where I think our biggest innovation is. We're proposing a tranched repayment mechanism where lenders are repaid according to the interest rate that they offer. So imagine that Bob runs off with the money. His collateral immediately goes up for auction and is liquidated, and maybe it only sells for a fraction of his debt at auction. We're going to use that money to repay our lenders in order of the interest rate that they offered, a tranched repayment model. This helps drive rates down because it incentivizes lenders to offer lower rates in reward for better default protection. It means less risk, less reward, more risk, more reward. Again, we're Now Finance. Our goals are to create loans with higher LTVs, optimal rates for borrowers and lenders, and a balanced risk-reward profile for lenders. We've been working on this for a little over a year. We would love to talk to you guys, anybody that's interested in the space. We're also launching a DAO, so we'd love to connect with you guys. Please come talk to us. Follow us on Twitter. We're at Now Finance. And thank you guys so much for being here. Really appreciate it.